Let's welcome in our next guest, Todd Stankiewicz, co-portfolio manager, the Free Markets ETF. And we're going to be talking about deregulation, which has really been a big focus, certainly for the markets, particularly this year. A lot of this sort of creeping into the conversation, which sectors might benefit from that. How are you looking at the sort of broader theme? Just want to get your sort of 30,000 feet view on it first and foremost.
Yeah, thank you. I think it's an evolving situation because we've seen the pace of deregulatory orders and legislation coming out, which is very rapid and very quick. So you have to be quick to adapt. And I think the market as a whole has focused on the major themes, which are with the banks. But I think there's some smaller sub-themes that are emerging right there that people aren't necessarily focusing on, such as in the communication sector and certain healthcare, as well as infrastructure.
Yeah, definitely the first sort of sector that does spring to mind, given the conversations we have time and time again, is the banks. And, you know, this sort of view that they will very much become beneficiaries of some deregulation. But let's talk about some of those other sectors you highlight. And I'm particularly interested also in the energy space, as you touch on, particularly around nuclear, as this has been getting a little bit of a look in, particularly because of the huge commitments that we're seeing coming from some of the tech companies, particularly to power all the AI and data centers. So I just want to sort of touch on that first. What are you seeing there in that sector?
Yeah, I think this is a major point that we have to pay attention to, because if AI is going to continue evolving the way it has to, we need the energy to power it. And so nuclear is a great long-term play, or at least that's how we view it, because you have the ability to generate clean energy and at an efficient level, right? And so that's why I think, as you stated before, we're seeing certain companies contract with certain nuclear power and energy companies. I think the challenge is, how do we create that infrastructure? How do we build it up? And how do we do it quickly to get there? And there's probably a lot of energy plays that we have to focus on to bridge that gap between when we get nuclear ramped up to where it should be from where we are today. And I think that's also why we've seen a focus on coal and natural gas right now. And we've seen probably those areas as a place to bridge that gap until we get nuclear up and running. And so when you look at nuclear energy, it's not just the infrastructure, it's who is actually modernizing technology in that space so that we can build those reactors and scale those reactors to meet the demands of AI right now.
Yeah, and it's not just about obviously getting these new projects off the ground, but more sort of looking at current nuclear power plants and looking to sort of get them back up and running again, which is something that obviously is a theme we've seen with some of the big tech companies that have been looking at some of these investments. You mentioned communications as well. Why is that an interesting space? I mean, how is that set to benefit? What sort of deregulation are you seeing in that particular space?
Yeah, I think this is a space that almost nobody is talking about and no one expected to see major deregulation in. And really what we saw is, just on August 7th, we saw one of the biggest rollbacks from the FCC in regulatory oversight. And it's probably represents one of the biggest regulatory rollbacks we're seeing across all the sectors right now. They rolled back something like 100 different rules that are now allowing communications companies to move into new markets, merge with other companies, and create scale and improve their margins, hopefully, from this kind of regulatory rollback. And some of these regulations have been in place probably going back to the 1970s and 1960s, and they haven't been touched for a very long time. And companies have been doing these, but they've been having to jump through hoops to satisfy the FCC regulatory rules to go through them. So now you could see companies like one of our positions, Nexstar Media Group, is actually able to scale pretty efficiently, may be able to move into new markets, and may be able to buy more stations within these markets and add operational efficiency. So I just don't see anyone talking about this right now. And this is an area we identified from the day the ETF actually started trading on the New York Stock Exchange there, and back on June 10th. So we've had that as a position and a viewpoint for a long time.
Okay, what about healthcare? Because this is obviously an area that many have been paying attention to, and there have also been some concerns around deregulation, particularly in this space. But where are some of the opportunities? How are you looking at this particular sector?
Yeah, I think a lot of people are focused on the pharmaceutical and the basically the attack on the pharmaceutical companies around the cost there. But I think people are missing as you're putting up on the screen here, telehealth. And when we look at the advantages of telehealth, and what was buried in the one big beautiful bill was a permanence of the telehealth safe harbor. And basically what that's allowing is for high deductible health plans, individuals can still use telehealth on a pre-deductible basis. So that's really confirming that telehealth is here to stay. And certain companies that are scaling technology in that space, one of those that we look at is Doximity. We think that they're building that technology infrastructure to help make telehealth and scale that across different platforms. And then we look at one of the obvious ones that are out there. HIMSS has been bringing pharmaceuticals and telehealth into everyone's life on a different scale. And so, like you have up there, I think we're looking at the cross between telehealth and technology right now, which is where that opportunity lies. So we think that that's a very attractive place. And again, a lot of people aren't talking about this, and I think this is really embedded and buried in that one big beautiful bill.
Okay, and defense and aerospace, and what are you seeing particularly in that sector?
I think defense and aerospace, this is an area that certain people started to look at and focus on. I think it's a very big area. And I think some of these stocks rallied very early on with anticipation of investment and deregulation within the space. But what we saw was back in early June, I think it was around June 6th or 7th, we saw a lot of deregulation scale back basically for air taxis and electric vertical takeoff and landing vehicles. And so there's a small subset of aerospace and defense companies who are focusing on that segment of the market. And they have traditionally been held back very aggressively by FAA approvals and regulations in that. So as we've seen the executive orders that are rolling back those regulations, I think that's going to increase our speed to market. And particularly, I think there's a focus on having air taxis in place for the Los Angeles Olympics. So this is something that it's not just like a decade in the future. I mean, these are things that we're really focused on and we're trying to approach very quickly. And I think can have real benefits and actually change the quality of life for people.
Okay, so we've covered energy, defense, healthcare, financial services, and some of the nuclear space as well. I'm just wondering, what you're seeing as far as what the next area could be as far as seeing more deregulation down the pike. Where are some of the opportunities and sort of sectors that you're looking at right now?
Yeah, I think really that evolution is going to be difficult to predict. But if we look at the current trend, right, these areas of deregulation, these areas of executive orders haven't been random. When we look at it, we're seeing executive orders around stablecoin, cryptocurrency, AI, that we're seeing deregulation around the infrastructure that's building those out, the energy companies that we need to power that infrastructure and power those companies. And then, again, we're seeing to technology and the services that will help utilize AI to go deliver that to the people. So what we're going to see is we're going to continue to see this trend that's going to help ease that path towards basically advancing the U.S. Manufacturing, U.S. as an AI leader, and all the peripheries that go into building that out. So why it's tough, because of the rapid pace in which we've seen executives' orders flow out to anticipate that. We actually have to leverage and use AI to help anticipate what that looks like. And so that's been a big part of our portfolio construction process, is trying to understand how we're anticipating that is using the exact tools that are being deregulated right now.
Okay, well, thanks for helping us unpack some of those sectors and some of the key themes and also opportunities there in navigating all this deregulation. It's been a really fascinating chat, Todd. Thanks so much. I appreciate your time. Todd Stankiewicz, co-portfolio manager of the Free Markets ETF, for joining the show.